laws or, tax laws that the government is saying, here's what we want you to do.
Right.
And if you do what we want you to do, you cut your taxes.
Right.
Or, you save on taxes because being a business owner means you're going to employ people.
Correct.
So you're creating capital, you're creating a bigger tax base. If you own real estate or like, apartment buildings, you're giving people a place to live. You're doing the things that the government wants you to do. So you get a tax break, not, oh, Donald Trump didn't pay taxes. It's like, because he knows the tax law.
Right. And it's not gaming. It's exactly right. They want to incentivize creation of jobs. They want to incentivize responsible ownership of property. They want to incentivize purchasing property in depleted areas. They want to incentivize the reclaiming of areas that have been environmentally damaged. Like there's lots of stuff where it's not cheating. It's just understanding what does the government want to incentivize and taking steps in that direction. Eli, you want to talk about your business's biggest liability?
Yeah, I mean, your business's largest liability is gonna be taxes every single year. I don't know how many of you guys in this room keep P&L, but like I do mine every month. I forecast throughout the year, and then at the end of the year, I balance it all out. And no matter what you pay in taxes is going to be the largest, because it's based off of your income. So the reason why we wanted to have this conversation is to try to help you reduce that as much as possible, because that's more money in your pocket.
Cool.
And to add to what Preston was saying, funny enough, the way that the code is written is it's not even you getting a break on your taxes. The government is paying you back for those expenses. Like it's money not transferred, but it's the break, but technically yeah.
Yep. One note before we dive in. So we're going to kind of have two main elements of the strategy part of the conversation. One is ways to save on taxes and be as tax efficient as possible as a realtor selling houses. But then part of the conversation will be building wealth as it relates to understanding taxes. And those are related, but those are different conversations. One just other intro note, and it's more just like my moment to talk about a pet peeve of mine. We operate from an income tax standpoint in what's called a progressive tax economy, which means, and every year the brackets change a little bit, but the first however many $1,000s you earn is taxed at 9 or 10%. Then the next however many $1,000s you earn is at 12%, and it scales up. Huge pet peeve of mine is, oh, I'm trying to do it so that my threshold is beneath that because I don't want to be taxed at that higher rate, which means I earn less money. It's like, no, that's not how it works. It's just the money above that threshold that gets taxed at that earlier amount. Loads of Americans don't understand that. Like, oh, I'm in the 35% tax bracket, which means everything's taxed at that. No, just the stuff that's above that amount. So just a PSA, hey.
Yeah.
We're glad you're here.
So I'm here.
Worth its
People that are like, oh, I don't want to accept this raise because it puts me in a different tax bracket. It's like, well, your first 100,000, taxed at 10%. 100, say 50,000 after that is taxed at 12%. Well,
Right.
if you make $102,000, you're only having $2 that are taxed at 12%.
right.
And it's just, people.
The goal should always be, with only a couple of exceptions, to make more money. And I think sometimes when we go too deep into gaming it, it's like, no, they're trying to incentivize things, but I still want to make more money. And I think it's a broke mentality to say, I just want to figure out how to pay less in taxes. Like, no, the goal is to build wealth here. And if you want to make less money because of your poor understanding of the tax system, then that's fine. It's not going to serve you well long term. One note, and then I'll pass to Eli with regards to business expenses. In order for something to qualify as a business expense, and therefore for there to be potential for it to be deducted and reduce your taxable income, it needs to check 3 boxes. And this is straight from the IRS. It needs to fulfill a business purpose. It needs to be ordinary. That means customary in the world of what you do. So for example, your vehicle, it's mode of transportation, you use it, it can be a form of marketing. Purchasing a Lamborghini is not gonna count as a taxable, you're not gonna be able to deduct the full amount there simply because that's not ordinary in our area.
Hear me out. So it's an espresso machine, a Lamborghini versus a coffee maker in the office. You know what I mean? Like in comparison.
The Jose mobiles and then-
The
Yes,
espresso-
yes.
espresso machine.
Similarly, I take clients out on my boat from time to time and strengthen relationships there. Your boat's not gonna be a deductible expense because that's not an ordinary use for someone in this business.
I'll just buy a.
Unless you were from Florida and.
There you go.
I'll buy a side by
Constantly use.
side and just show someone vacant land once, take them around.
You know, worth a shot. And then necessary, this is something that is important for growing my business, important for managing my business. It's not just and there are fine print and loopholes that you can get away with, but that's what tax law says. All right, Eli, let's talk about opportunities to reduce taxes.
Before we jump onto that one, to qualify as a business expense and all those different ones, is it 2 CPAS to talk about the difference of passive and active deductions?
Go ahead.
Okay, all right, so I'll make sure. So like with passive deductions, that's like donating to charity and things of that nature. So like if they would use the Homes for Heroes program at all for lead generation. That 25% that you're giving, you're donating it to a charity that's giving it to those people. So that is technically a passive loss. The difference between an active and a passive loss, as I understand it, and correct me if I'm wrong, is you do have to pay the money out, you know, but it doesn't affect your income on paper. So, because when you go to finance something, you can do it off of your total amount that you make on your business, like say your business makes 200 grand, but at the end of the day, you only take home 75 of that. You're not financing like a car or a house off that 200, it's just off the 75 that you make. If you donate to charity and it's a passive loss, that does not affect your financeable income. Because it's still money you're paying out, but you still get to keep that on it. Am I saying that correctly, would you say?
That's my understanding.
Yeah, that's my understanding of it as well. So for things that, you know, donating to charity and things, or if you guys have ever felt like I want to do it to reduce your tax bill or, you know,
Mhm.
donate to charities, it's a great thing to do.
Yeah.
don't get me wrong. But.
Win-win.
But
Yeah.
yes, so.
Okay.
But yeah, to move down to the strategies of as a self-employed realtor, your fees and dues, your marketing, your gifts, your office expenses, travel expenses, all that stuff. So like Mark had said, starting with the travel expenses, your vehicle, we are in there all day. I mean, me personally, 6 to 8 hours a day spent in my car driving around. I believe it is 95% of the driving has to be business related for the entire thing to get eaten. So like your car payments, the insurance on that car, and I slapped a little, to throw the marketing on there too, like a license plate cover with my phone number, need a realtor, blah, 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 blah. So I don't believe it has to be owned by your business either. So if any of you have an LLC, you don't have to
Correct.
purchase it and then title it over to your LLC. It can be owned by you personally. It's just 95% of the driving has to be done for your business. The best way to track that, I use an app called Everlance. I think I told you about it, Carlin, like a month or two ago. Some people, they like track their miles on a notebook. This app I use, and if, I don't know if you can, or if anybody's ever heard of it, but it tracks your location all the time. So as soon as like you connect to your car, it starts a trip. As soon as you hit your brake, or as soon as you stop and put it in park, stops the trip. And then you can just swipe it for work or for personal, and you get to choose that. The worst part about me is I wait till like the end of the month to do it.
Yeah. Yeah, I don't know.
So, yeah, it gives you the address of where you started, where you stopped, everything like that. So I do like that. That's my favorite app. Another reason why I like it is it prints out a spreadsheet for you to give to your accountant. So that way, like, you don't have to, you know, give them 1,000 screenshots of what you did. You just hit export, you can mail. I think you can actually connect them too. Like if you have the pro version of it, which is like $8 a month, you can immediately connect them and then it'll shoot it right out. Communication expenses, like your cell phone, things that, you know, your mailers and things of that nature. I mean, that kind of, I guess that would fall under marketing as well, like your mailers, but communication especially, your cell phone.
Can you talk a little bit slower?
Sorry.
Not the computer doesn't pick up as fast as our ears do.
Gotcha, sorry. Your cell phone bill, you get to eat that entire thing on your taxes.
A little bit faster.
Your cell phone, I definitely like that one as well. You can eat the entire thing. Now, question.
Even if it's like on a family plan, like we could say, meeting
It's
this,
your portion of it.
so just my line.
Yes,
Okay.
so for the longest time, I was tied to my father-in-law and he pays for his employees to have it. And so he just jumped my wife and I onto his. So I just got what my portion of the bill was and that's what I said.
One little PSA or interjection as we continue to talk about deductible expenses is if you, like me, are employed beyond, like I'm 1099 as someone who sells homes, I'm W-2 as someone who works here. I think most in this room are you earn income from a different source as well.
And I still am, yes.
Yep. And I'm not fully sure about the others on Zoom, but if you know, I earn some income from a W-2, some from a couple different 1099s. It would just be effective for
Yes.
kind of the percentage of your world. So for me with tracking mileage, like I'm much more dialed into it because like, oh yeah, I did take that trip to put a sign in the yard, or I did take that trip, but most of my world is not related to that.
Right. Like, and so you can only track it for when you're doing.
1099 based work.
1099 based stuff. So
Yep.
you can't eat it all for this, you know, like.
But I have it split because doing my job in nursing and driving to homes, then, you know, I have a different tracker for. that.
Yep.
Yeah.
Good. Good.
Yeah. Do you have a different category in Everlance? Cause you can set that up in there.
No, I guess you have to show me.
Yep, I can do that. Yeah, you can set it up for, cause like mine is home services. I used to DoorDash like 5 years ago, so I would swipe it, hit it on there too.
You
Office,
can save different like addresses, like, okay, if this is one of your clients, like for your nursing, you always go to their house every Tuesday or whatever. You can save it and it says, oh, you went there.
A repeated trip.
Yeah.
What else?
office expenses, marketing, marketing and gifts, I'll just kind of conglomerate all that in the same. So buying a laptop, pretty much any, and this is what I love about being a realtor, we have access to more deductions than any other independent contractor. So your laptop, if you buy a television screen for your office to watch things, your desk, everything like that, all of that gets to get eaten. And I believe on electronics, you can take the depreciation too, correct? Mark?
Correct. You need an accountant to do that
To
for
do
you.
that for
Yeah,
you,
yeah, we'll get into that. Yeah, yeah.
But that's more of a recurring thing throughout the, years to come. And then your fees and dues. I mean, as we all know, those fees, they just don't stop coming.
And that's your monthly here, that's your MLS, that's your board, anything that you have to pay in order to run your license.
Yeah.
Qualifies there. One just further asterisk with regards to marketing and gifts. You guys know the threshold from a gift standpoint in order for it to be taxable. Yep, $25. So a $25 value I can just give as a closing gift. If the gift has a marketing element to it, so you buy knives from Cutco Kevin and it's branded to you, therefore it's marketing, you're able to deduct that full expense. So
Every
just
gift I get, yeah, how much for that?
From Preston.
from Preston.
Things that I did, I was, because they were doing it for home improvements, I was like getting them with Lowe's gift card and expensing out the whole thing, those were on.
Yeah, you're only gonna be able to.
25 of that. If you were to be audited, only 25 of that would count.
Yes. So like, let's,
On $50.
Yeah.
so like.
Put her in there.
This bottle is a closing gift. If it said nothing, $25. If I put like, thank you for using me to buy and sell your home, Eli Mongol Realtor to get results with my phone number.
Yeah.
Yeah.
Well,
Or even just
and I would just say, and we could bring Cutco Kevin in to talk about the merits of this. Like a good closing gift is useful, it lasts, and it's classy. It's something that people want to have around. And so, Cutco is expensive, but you want some. I've got a cutting board that my agent gave me a few years ago, and it's like it's nice and it works and it's good. And we were clients of the same team, so that makes sense.
With Jose,
Yeah.
okay.
So that's a good move from a tax standpoint, but also conceivably from a repeat business standpoint.
Another one, clothing. I don't know if you guys knew that one. I know there's a cap on what you can purchase for clothing. I want to say it's 12,000, but again, that's after your accountant. But yeah, the clothing that you use to, could you dress it up for work?
Guess I can stop shopping at Goodwill.
Right, me too. And so it's just,
Yeah.
And then be careful, so you go to buy a car next year and they're like, "Price, you only $5,000 last year," if that's an act.
Yeah, that's
Yeah, right.
One other note with regards to your office, and you guys are probably already aware of this, but it has to be space that is wholly and solely dedicated to that purpose. It can't be like, oh, I work from my living room while watching TV at nights, like many realtors do. Your living room can't count, but if you have a separate space where this is what the space is designed for, and this is how I use it. Do the square footage, and that's and that number changes every year, kind of $1 per square foot.
Share, like my office is shared with my husband, who works out of the office, his office as well, when he's home during the week. So just, but so in order, like for measurements for square footage, then am I cutting it in half? Is he-
Probably.
The other half?
Yeah, letter of the law would probably say cut that in half.
Okay.
But if you file jointly, it would be the same. Because
Correct.
Unless, or what if you had it?
Yeah, unless if he's W-2, then no. If he's 1099, then
He's a W-2.
Okay.
so-
yeah, I would take half from a safety standpoint.
Okay. And then like utilities, same thing? Like
Uh,
electricity,
No, I don't think your internet.
Internet, cell phone bill, as mentioned, but I don't, gas and electric feels like a stretch.
Yeah.
Unless it was you have a little she shed out back that has its own line that you're able to,
differing stories. about
Yeah.
It's like a percentage.
A lot of
Yep.
those differing stories come from like the IRS auditing it. That's the, people are putting whatever they want on these things a lot of times, the IRS auditing you. Always err on the side of being cautious and honest, because it's like, oh, it's never gonna happen to me. Those are like famous last words.
Mhm.
even that, wasn't she audited?
Yeah. Yep.
She was.
Yep.
She sure was.
anything else, kind of category wise or things that from a kind of regular life as a realtor? I would say, education. So you paid for Bold, that's an education expense. You go to family reunion, you have a coach. All of those are educational, professional development expenses, as well.
Client meals, I don't know if you guys are lunch dinner people, I can't, I don't believe there's a cap on client meals, I just think you can't have alcohol on it.
I,
I expect our entire lunch with booze.
I thought it was 50%.
it's 50%. That's my understanding. Yep.
So.
But you gotta keep your receipts, yes?
Correct.
Now, to touch on that. I would recommend everybody get their own separate bit, if you have an LLC, do that first. Which, run it however you want to, and then get a business account with one credit card that you run everything on. If you intermix personal with not, you're gonna drive your account crazy, and you're not even gonna be able to know what's going on in there when you go to balance everything out. So I have a Chase bank account just for my LLC with a credit card attached just to that, and then every quarter when I file my taxes, I just print out all the statements. Boom, there you go, here's all my supporting receipts, you do your job, call me when you're done.
I just do mine on an expense sheet at the end of every week, just graph.
Yeah.
That works.
Good.
For columns for meals, gifts,
That's good.
region,
That works.
Yeah, I do that on Excel personally, very simple, yeah.
yeah.
Let's shift over to the wealth building side of it, and we will provide space for more free conversation at the end as well. So just a number of things that many of you are probably aware of, but the government has put certain accounts, tax benefits on certain types of accounts that they want to incentivize. So we want, because the pension system is a kind of a dying breed and they're rarer and rarer. And because Social Security is something that we shouldn't bank on, we want to incentivize you saving for retirement. So IRA, every agent can start what's called a self-employed SEP IRA. I forget the contribution limits this year for that. For SEP IRA? Okay, okay.
That's what it's in my.
Yeah.
IRA.
I think self-directed is higher.
Which one specifically?
Go SEP.
My one with Chase is self-directed,
And that's the number?
7,000 for the self-directed.
To contribute up to 25% of the employee's total compensation or maximum of 61,000.
Yeah. Yeah, SEP is a lot higher.
66 for this year.
Okay, yeah. Whereas traditional Roth Those are 6,000 or 7,000 depending on where you're at. But that's, and not to go too deep, traditional models, if it doesn't have the Roth tag, then it's going to be done traditionally, which means it's pre-tax, it's a tax benefit now, and then you'll get taxed on the income when you take it at retirement. Roth is the reverse of that, where the money is taxed now, it grows tax-free, and what you get is what you get. So
How much is it taxed?
it depends on your tax bracket at that time.
Oh, okay.
So a good CPA would be your best conversation partner there.
Well,
Yep.
here's my thing, like from my previous employer, I used to work at Cleveland Clinic for 25 years, and actually they sent me a letter for, I have a buyout option for my pension, which I can take anytime now, but
Mhm.
I'm like, oh, what do I do with that? And then I also have a 401k and a 403b, and they're all kind of floating around too, so should I just be combining everything into one and putting all of my?
I would roll your 403b and 401k into your own IRA,
Okay.
mainly because you'll have a lot better options in there. Typically 401ks and 403bs, they're fine, but they're going to be a little bit more expensive. And it's like, here's 10 different mutual funds you can pick from instead of 1,000. So you'll have a better selection of offerings.
What about my pension? Like
Let's talk about that after, because
Okay.
that's often like, yeah. No, that's a great question. So retirement accounts, and that's one of those like, it's money that's there and you're wise to take advantage of it. If you're in a different stage of life, it might not be the most important thing for you, depending on your income level. But that's a deeper conversation as well. If you have kids that you're looking to save for college, 529 accounts are another thing where you can contribute and that money grows tax-free. And then a fantastic one, depending on your health insurance situation, is an HSA account, a health savings account. It's literally the most tax-advantaged account out there, because your contributions up to a certain limit every year. I think this year it's $3,500 per family. Those come out of your taxes. So that reduces your taxable income, and then it grows tax-free, and your use of it is tax-free as well. So basically you're getting the tax benefit twice, which
now, is that a rollover,
Mm-mm.
HSA, or you gotta use it by year's end every single year?
No, it grows. And you can, the hacks around HSA, like we could teach a class on that on its own, because if you play the receipts game smart, you can actually invest the HSA money in mutual funds and it grows. And as long as you're like, you can pay out of pocket and you can contribute that amount and it's growing, like it's incredibly powerful. Yeah. So those are kind of three types of accounts. This isn't a real estate investing class, but oftentimes people are interested in owning real estate or investing in real estate because of cash flow. Oh, I want to be financially free. But similarly, when you own rental real estate, that's a business. So expenses related to that are all tax deductible, including your mortgage insurance, maintenance, management, all of those things. But then depreciation is where it gets really powerful. So the average property at a normal pace, and we won't go deep diving on cost segregation, but it depreciates over a 27.5-year schedule. So if I buy a property for $100,000, I'm going to divide, and you have to take the raw land out of that. So let's say that the actual house is worth $80,000. 80,000 divided by 27.5 means that I can depreciate almost $3,000 every year. Say I profited $2,500 on that from the actual cash flow. That means I lost money. For me, like I own rental property. I have for 8 years now, and I've never made any money on my rental properties as it pertains to the IRS. So really powerful, and you can shelter other income in there as well. So if you're self-employed and you own rental property, it's the most tax advantaged kind of situation you can imagine.
Can you do like on commercial property advance, or what do they call it? Like you can pull out the depreciation on 10 years ahead or something like that.
Yes. So that's what's called cost segregation. So you can hire a third party sometimes it's an engineering firm, sometimes it's an accounting firm, to do what's called a cost segregation study, which is they're really gonna, okay, how much is the land worth? They're gonna kind of deep dive, appraise it, and then they're gonna say, basically give you permission to depreciate at a faster rate. Hey, I'm gonna take 3 years worth of depreciation this year. You're gonna pay a couple $1,000s for that study. So if you own one property, it's not typically gonna be worth it. But it can be powerful in a year where you were very profitable and like you shouldn't do it just normally because it's not going to be a tax credit. It's just going to be more of a loss, which doesn't mean you're making more money necessarily. But it can be a really powerful strategy.
Now, how does depreciation recapture work? Like you sell a property?
You just teed me up. So, the 1031 exchange, many of you have probably heard of that. If helping a client or reading that somewhere, 1031, that's the tax code number that it is. Basically, it means that when you sell your primary residence, the growth is tax-free up to $250,000, I think, for an individual filing solely $500,000 for. So your primary residence, you're not going to get hammered with capital gains taxes. When you sell an investment property of any type, single family or commercial or land or any type, you will be taxed on those gains at a long-term or a short-term capital gains rate, depending on how long you held it for. Not just that, so not just the gains of it, but similarly, hey, say I've owned it for a few years and I've taken 5 years worth of depreciation. That means there's let's say $40,000 more at my tax rate. Let's say that's another $8,000 or $10,000 in tax liability there. So it's not just capital gains, but it's depreciation. So if I just sell a rental property straight up, don't do anything with it, I'm getting hit twice as hard as you might think. A 1031 exchange is a vehicle that enables you to avoid both of those things.
I didn't know that you did the depreciation too. I only knew.
Yes, both. And for me, so I've done this, I'm doing it my third time right now. And it was the depreciation element that was like, oh, I'm gonna have like a $12,000 check with capital gains. Oh, it's gonna be $23,000 once I factor in the depreciation recapture. I don't want to write that check. So it's 1031. If you want to be a rental investor, 1031 is your best friend. They may do away with the 1031 exchange. Yeah, it's on the chopping block. So
Is there a cap on like, because I'm an investor now, so I'll probably be listing this home, so he makes money off of this house that I sell for him. Is there a cap put on like that profit that moves to the next property that he buys? Or can he take the full amount and move?
Full amount. Yeah, if he's doing a 1031 exchange, there's no limits. Say he profited $500,000.
You can move that over.
So briefly, parameters on the 1031 exchange, because it's pretty lined out. So there's timing limits. So if I sell a property as I am right now, I have 45 days to identify my replacement properties, which is up to 3 properties or up to 200% of the value of the property that I sold. So say I'm selling $200,000 worth of property, I can name up to $400,000 worth of replacement candidates. I then also have 180 days or 6 months from the time of closing on the sale to close on that property. So it's a decent time horizon, but you do need to get moving. You can't pay cash for something, so that whatever, assuming that there was a mortgage, if you had $100,000 mortgage on that first property, you need to have at least $100,000 worth of loan on your next one as well, in order to take full advantage of it. But with a 1031 exchange, it's not as though I'm either in it or I'm out. Say I only get an $80,000 mortgage, I'm just getting marginally less benefit from that 1031. Then he's fine. If he doesn't have a mortgage on his existing property, then he can roll the full amount. Yep. Yeah.
I had somebody buy one of my listings with a 1031 exchange. It was cash.
That means that he owned his previous property outright.
Okay.
Or he's not taking full benefit of the 1031 exchange.
Or they could have been buying multiple properties at the same time. Is that?
Mhm.
Okay. Okay.
Yep. Yeah, I did one last fall and bought 3 with it. It doesn't have to be a 1-for-1. It has to be a like kind exchange. So I can't go and buy, say I'm gonna invest in over the road trucks, which a friend of mine does. Like you can't sell a house and buy trucks with it.
Okay.
It has to be property
estate to real
for
estate.
property.
So
I even think that like, I think you can do like a house for land, but that gets a little bit.
Residential with commercial,
Mhm,
okay.
mhm.
So like kind meaning something
Real-
that house in real estate.
Yeah,
Okay.
you're not gonna go buy a bunch of cryptocurrency.
Right.
It needs to be a similar asset class.
So the benefit is that instead of just like selling your rental, your investment outright, you can sell it to purchase more. Okay.
Yep.
Interesting.
Yep, and for me, our mentality is, if you have a short-term play with, or a short-term mentality with real estate investing, this isn't gonna be that beneficial to you. But if your mentality is, no, like this is how my wife and I think about it. Like once I'm in a house, whether I keep that house or not is irrelevant, but that money is always going to be real estate investing money. And then the snowball gains momentum as it grows. That's when it becomes powerful. But it's not a good short-term tool.
I've seen people do it with their personal residence because you have to live there to the 5 years that you own it. And you don't have to pay those capital gains, I think, what, $250.
Right.
But yeah, even it can be done on a personal residence, not just. Rental.
Right. Brings me to my next point, which is the catch-22 note there. The challenge. So if I want to be an investor that's building wealth and I want to be savvy with my taxes, there's a little bit of catch-22 or double-edged sword, depending on how you think of it. Because if the goal of reducing the byproduct of reducing taxes means that my tax returns show that I didn't make as much money as I really did. If I'm then seeking in a real estate investor standpoint to go and try to qualify for a mortgage, the lender is going to say like, oh, well, you're telling me you made this, but your tax return tells me that you did this. And so there is a little bit of, you need to play your cards right. And the more that you invest, the less that becomes an issue because you've got that track record to show for it. But there's a lot of people who made a lot of money, but it doesn't look like they made a lot of money that aren't as lendable on paper as it seems. If you're going a traditional lending route.
I was gonna say that's where stuff like DSCR loans and like do 1099 loans that like see.
Right.
Keller Mortgages, Keller Home Loans doing. So.
Yep.
You also invite an audit. If you show 0 for like 5 years and like you bought a car, you bought 2 houses, you did that, they're gonna come down on you now.
Right. Just a couple other little notes, to self-file or hire a pro. When you're first getting started, self-filing is typically fine. But for me, I've had an accountant for, this will be year 7 with him. And most of that time I was not doing the number of things that I'm doing now. It's been well worth it every time. And for me, it's like, oh, I could pay TurboTax a little bit of money, or I could pay a pro 5 times that amount of money, and it's been worth it every time.
Is that
Yeah.
right too? Your
Yeah, absolutely. That's a legal and professional services is a write-off. And that's true regardless of whether you're 1099 or not. But yes. So my strong recommendation is find someone that you can trust, that knows their stuff, that has the heart of a teacher, that is seeking to explain and not just like, I'll just take care of it. Like you're not hiring them to do your taxes. You're hiring them to guide you and be a consultant in your corner as you're trying to make good decisions. So because I've had the same guy for 7 years, I can call him and say, hey, Russell, here's some stuff that's coming up. What things do I need to be thinking about? Or we're selling a property. Help me understand the implications of this, just as we think about all the moving parts. So
This might be a stupid question, but is that like a retainer thing, or is it just like, here comes tax time, here's your check, I can call you at any time of the year and ask you a question? Or does he charge per hour?
no, he charges me a flat rate for filing taxes once a year, and we talk 2 or 3 times a year about other things.
I didn't know if it was like a
he wants to do a discovery call. Like, it's like before we file, like, hey, let's have a conversation. Like, were there any other major events that I should know about? Do you have anything coming up this year that would be good for me to know about? Because we've been in a relationship, you're not going to get that if you walk down to H&R Block. You need to, and I think I pay him $500 or $600, which I think is pretty normal.
I'm at like 575.
Yeah. That includes business filing and personal.
Is he also the CPA, like your CPA too, or is he just files and taxes?
Yeah, he's a
Like
CPA.
you just give him all your expenses for the year?
Oh, he's not my bookkeeper.
Okay.
Yeah, I don't have a bookkeeper, and I should have a
You are the
bookkeeper.
bookkeeper.
Yeah. Oh, I'm like my son drawing. Yeah, I'm more of a beekeeper than I am a bookkeeper. Yeah, that's a hole in my world for sure. This is a stressful time of year. I don't file early, in case you guys are curious.
Yeah.
Just a word on entities. Again, I'm not a pro. You guys probably have more experience, but from my understanding, having an LLC filing as an S corp is the most tax advantaged opportunity for most fairly productive agents. There can be good reasons to go incorporated, but most people aren't there until you've got kind of more employees in your world. Yeah,
So what's the cost?
Jose's an LLC actually. Like yep,
What's the cost? for an LLC?
$100.
yeah,
Or you can do it online. I did mine on LegalZoom.
yeah.
Legal Zoom charge you a little bit more because they do it for
They
you.
do more, they give you more services though.
So the benefits of the filing of the S corp, just so you guys understand the why, is that without that protection, you are responsible for your full self-employment tax. When you file as an S corp, you have the opportunity to pay yourself a salary within your business and thereby reducing the amount that the self-employment tax would be applicable to. So you can lower your bill by a few $1,000s, depending on your income, obviously, and depending on how you pay yourself as an employee within your S corp.
And you can bring other employees on. I don't know. Carla, I know you have children. I don't think, does anybody else?
Oh, they're all grown and
They're all
gone.
grown, okay.
Mhm.
There's a tax code that I like to utilize called or not tax code, but tax hack rather, called the HYK method, hire your kids. I believe you can pay them up to $12,985 a year, so along with. Yep. Totally.
My kids are deadbeat.
Well, so like, what I do, I put it in her 529 and the tax refund I give her next year, let's go with all.
Nice. Smart.
So do they have to work? for
They
you?
do, yeah, so.
Or it's not just like, hey, here's.
Well, no, they do have to do the job that you hired them to do, so like at night here, when everybody's gone, I'll have my daughter come in, she'll wipe off my desk for me and everything like that, and then home, she'll.
Like,
like that.
heck, the salary, it's like not that. Yeah.
I'll be your desk wiper.
Now, is there an age minimum wage, like, or not age limit, but like age?
Threshold,
Which, yeah.
18, no, there's not.
or like younger, like can babies be employees?
No, I think they could be of age to do it, so I didn't start doing it with my daughter till she was 9.
Okay.
I look into that though, because on a podcast I listened to, and they have a website, but like they use their kids as models for some of their stuff. Yeah. You can't say that your baby's a bookkeeper in your business, but yeah. Yeah.
My dog to do marketing.
Um,
In my life.
other things, tips, tools for tracking, documenting. You mentioned Everlance is the one that you
Everlant's my
use.
Favorite app for mileage tracking, I think we talked about this at the last meeting for. Tracking your budgeting expenses, YNAB is another good one, or you mentioned one that you like.
One note that kind of combines them all. QuickBooks has one that does mileage, that does the self-employed one. You can take snaps of your receipts, like it all goes there. You don't have to have a paid QuickBooks account in order to utilize the app. But there's lots of programs out there, and the easier you can make it on yourself to snap receipts, to track mileage, get out of the world of spreadsheets as much as possible. And I'm do as I say, not as I do, because I love my spreadsheets.
YNAB.
You need a budget, or mint.com.
Or does Mint have an app? Yes.
Nick said, I would wipe just about anything for $12,000 a year.
I'll call you after
Noted, Nick, noted.
The days are for.
What else? I dropped a link on here and it's a year or two old, but this is kind of a tax deductions for realtors article that it takes a deeper dive on some of this. But my wisdom is track what you do. And I think that's to not Jose, to Eli's point about the LLC frees you up to open up the business account, which makes it clean to track. So methods for tracking and hire a pro. I would say those are the kind of the two.
outsourcing thing.
Um,
Something that you sell to people when they object to using a real, you know. Shower breaks, you call a plumber, you go to get divorced, you call an attorney, sell a house by a realtor, do your tax.
Our CPA saved us right around $20,000 the first year that we used him. So it's like,
That's.
you just got a client for life.
Oh,
Because
Do you know what he did? Like what?
it was, as it relates to the sale of property, I wasn't thinking as smart about that as I should. I wasn't taking advantage of, child tax credits as strategically as I could, which can be a game changer. And then strategic use of the HSA as well.
Mhm.
So. Just my 2 cents. Anything else? Other thoughts from things that work for you guys, other questions? Scenarios?
No, to add, again, that's my account did the same thing, well worth the $575. He told me about the clothing, I was like, oh, what?
I've never.
So what was the budget on the clothes like?
Forget the cap, it was obscene, it was like 12 grand if I remember correctly. I read this was.
And that's the thing.
You should be good, you know, what I mean, if you're.
Yeah, I think I see it like see.
I said,
Yeah.
No, it can't be a pair of basketball shorts, you know what I mean, like it's got.
But what if it's for a company pickup game? I'm just kidding.
You could make the case for it, because what you're doing is you're talking to like the IRS auditing. You, right?
Yeah, I
The
mean,
account just wants to see the bill.
yeah, I feel like if you're just itemizing things like that, then you better be itemizing them and, like you said, putting them in the category how they can be, how this pertain to your business that you're running.
And I think, like, I kind of made this comment earlier, as you think about, like, there's lots of stuff you can deduct. And I think there's too many people that have the like, ooh, deduction mentality as opposed to savvy business owner mentality. And it's like, okay, I need to have insurance, so I'm gonna obviously deduct that. I need to wear clothes, so I'm gonna deduct that. But am I gonna get these clothes or these clothes? You know, like, and I think it's like, oh, it's a deduction. Like, deduction doesn't mean it's free. It means it's discounted. You know, like it's nice to get a discount, but yeah, oh, it's a write-off, it's a write-off. Like, it's good to get write-offs. It's even better to build wealth. And so I think keeping it in context of managing expenses trumps tax savvy every day of the week.
And it's to add to that too, it's not 1-to-1. So if you spend 12 grand on clothing, you're not saving 12 grand on taxes. It's just reducing your liability percentage on the income that you're filing with tax.
Holly made a comment, solo 401k is a total game changer. Holly, are you able to unmute and talk a little bit more about that in your experience?
Okay, so I just went, thank you to Tiffany Pepper, who told me we were looking for a financial advisor, and she turned me on to Scott Lowe and we sat down with him. Basically, I've been sending 20,000 too much every year in tax. That if I would do things differently with the HSA and do a solo 401k, and you might want to even ask Tiffany about that. She does it too. If you're walk back in here, I could have him explain it better. But basically, with the HSA, you don't have to, and you shouldn't take out the money ever. He said, and there's a whole thing. You can go sit down with him for free for the first 2 visits. Absolutely astonishing.
What did you say his name was again, Holly?
Scott Lowe. He's right over behind the Dressler Road Cutler, and that it's the Affinity Group. I was so impressed. I can't even begin to tell you. So yeah, I way overpaid in taxes for years, and my CPA did not give me correct information. So the way, and he doesn't sell annuities or anything like that. He's actually a fiduciary for you. And
Nice.
he's this software that he spends $90,000 a year. to have that basically it's called e-money, I think it is. Anyways, you can track all your stuff, but it's right on that.
Cool.
But anyways, with the solo 401k, I think you can put in 58 or 65,000 a year. And
Okay.
basically that it would take me from being, I could be confusing this with the SCP part of it, but I've been paying the 15% self-employment tax, and the way they're redoing me, it's like 7%. And then you get like another kind of credit or something like that. It's also another 7 or something like that. That basically it's getting me out of that 15% self-employment tax.
Nice. That's helpful. Thank you.
Yeah. But, yeah,
Just a note on hiring pros on a broader level, because this ties to a little bit of our text from the other day. Hiring people who know more than you is always a good idea. And it's not a replacement for financial education yourself. You know, would you go to your realtor for tax advice? Probably not. Would you go to your accountant for investing advice? In one way, yes. And I think the more people a financial advisor that can help you with investing and annuities and life insurance and those sorts of things. That's a member of your team, but in no case should you just say like, can you just be the one that makes decisions for my money? That's my perspective. And I like financial education. I enjoy it, but I think we get into dangerous waters like, oh, that person just does it for me. It's like, no, I still need to know what's going on in my world. And usually the person on the other end, as we are as realtors, like, no, they benefit when we buy the stuff that they do. And that's not an unethical thing, but you can't outsource your path. You can outsource the professional advice, but you always take it in context. That's my
Mark,
2 cents.
can I add one more thing?
Yeah, please.
Okay, so with Scott, when I went to that, he basically has a whole dream team. So he wants you to have 2 meetings a year with your state planner, your state attorney, your person with insurance, your like all your categories. You can bring your own people, but they have to be willing to meet with him and look at your whole portfolio twice a year. If they're not,
Oh, that's cool.
yeah. If not, he has all these people that will do it, and they don't charge like for their time, but you know, he recommends them. So like our first meeting we had, the state attorney go look at our whole situation and point out, you know, for free what we're doing wrong, what we could be improving, and some good pointers that were very eye-opening. And we just go around with the 12 different categories of, and it's not like the cheapest people, it's not the most expensive, they're usually mid-range, but they know more than you. And he's like interviewed, so he wouldn't give, you know, us the same CPA as, you know, somebody in some other company has different people for different things that he would recommend, but it helps take, and then like they called and checked, we're changing our insurance. There's huge benefits of that too.
Yeah, that's cool. A more
Yeah.
holistic picture.
Yeah.
Nice.
Recommend.
Thanks for the recommendation.
You're welcome.
Anything else? We just got a couple more minutes. Yeah, Preston.
When looking for a CPA, would you recommend finding someone who also invests in real estate? If that's what you do?
I think
Or is it-
it's logical, you know, kind of like an agent. Like, would I only work with an agent that invests in real estate? I would say I would bias myself towards it because they know it, they feel it, they're going to provide a different type of advice, and you can still give quality advice without that. So I think if you intend to invest in real estate more, that's an important part of your question. Like, hey, tell me about your experiencing and working with real estate investors. Tell me about, have you worked with 1031 exchanges or cost segregation, you know, those sorts of things, just to see if they're talking from knowledge or from, they read a book one time. My accountant doesn't invest in real estate, but what I appreciate about him is he's really learning based. So he's like, oh, great. I know that that's a thing. And that's why he likes to do the pre-call, is like, I'm going to go do some research for a while to make sure that he's not just like, here's what I know to be true, and this is what we're going to do. He's like, oh, you just gave me some homework and I'm going to go do it. Like, he probably makes like $5 an hour off me when it's all said and done. Russell, you can charge me more if you want. He does. Yes, I would say not necessarily, but probably good,
My
good too.
mom also does investments and stuff too,
Mhm.
so, not real estate investments that I know of, but she has like 2 companies basically.
Wow.
So she helped me with both, and then, like, we're having a conversation, she was like, hey, if you owe anything, you could contribute more to your IRA, and I'm like, yeah, just let me know. So I feel like she's got my back,
Yeah,
so,
that's the kind of stuff that I want, because I don't know too much like IRAs, what like the SEP, I've never even heard of SEP IRA until literally today.
Mhm.
I've heard of Roth.
Good.
Self-directed
Yeah.
HSA, but I don't know what each one does, what the advantages are, like which one should I do, or I have no.
You need to
idea.
go talk to Scott Lowe. He knows, we covered all this.
Hmm.
That at that affinity group. I'm telling you what, I am kicking myself for not knowing about him and this sooner.
That's great.
So that's what I'm defining not just a CPA, but an advisor
Mhm,
that works as like a CPA, if that makes sense.
mhm, mhm.
And just kind of say, this is what I want to do, what's the best roadmap to get there?
Yep. Awesome. Well, I'll conclude the Zoom. Y'all are welcome to linger and chat. Thanks, Eli, for your wisdom. I think this is fun.
I think we should get that Scott Lowe guy come and do a talk here.
Mm-hmm. Yeah, do you know, I'm looking in here, Holly, do you know if he does CEs or teaches or anything like that?
I was just thinking how awesome it would be if he would come in. He's good friends with Jose, so there might be a chance, but he also has some of his portfolio in real estate. He invests in that. He might be willing to. He's a really cool guy, but basically my consultant fee, what I pay him is $200 a month. And I have him at, I can access him anytime for questions and whatnot. And then I think it's every month we sit down and look at everything. Twice a year, we sit down with the whole dream team. And have appointments where they just zoom in. We're in the conference room and go over their portion, 15 minutes with each one of them to make sure we're maximizing and all the changes and everything. But he knows all of this stuff. Any question you would ever have on any of it. That's where I learned the HSA. I mean, things I can talk for 2 days. I learned in 2 1-hour meetings, 4 hours maybe. So, and they are just over the top with customers. So come pick up the
Nice.
stuff from you.
Why don't you, Holly, would you mind connecting he and I? Just because I'd love to chat and see if there might be some opportunity with us.
Yeah, it would be super beneficial for everybody in our office.
Cool.
All right, thank you.
Thank you.
Bye.